Hey, good Tuesday, everybody. Welcome back into Mining Stock Daily. This is this week's first corporate update that we have for you. Happy to welcome in Mr. Frederick Bell from Elemental Royalties. Fred's joining us from London, where, you know what, optimism is high all around, not only for restrictions being lifted, but they also have a pretty good soccer team making their run at the Euro Trophy once again. So, Fred, how are you been?
Very, very good. And I'm going to take that compliment because I don't think we'll get it again often. So,
It is the nature of being British, I suppose.
yeah, yes. But no, on a serious note, I think great to see vaccinations progressing, and a realistic prospect in the second half of this year that we'll actually be able to get over to North America for the first time since we listed the company, which is a sentence I never thought I would ever say. 11 months on from going public, but yeah, it's going to be I think a really good opportunity to introduce the story to people.
A potential new chapter in the Elemental story here that's just beginning, so that's good.
Yes, and I think the news we just had on our biggest royalty, which is Australia's newest gold mine at Karlawinda, that has just had first gold pour today, and it's a 2% net smelter royalty that Elemental have there, that would pay us at current gold prices 4.5 million a year over the 10+ year reserve life. And I mean, if you look at it and think that mine with resources, even before exploration, it's probably going to be a 15-20 year mine. That's an awful lot of I think cornerstone revenue for us as a royalty company, and that royalty coming on stream is it's going to be the biggest asset that we own going forward. So it's a good time for it to be coming on, and I think really impressed that the management team, who are very well known in Australia, who've been very successful before. It's good to see that they've brought that mine, to first gold pour on time and on budget, despite COVID. So that's really encouraging, and it should ramp up the commercial production over the coming months.
So what's the estimated guidance for the annual revenue from Karlawinda alone for Elemental?
So on an annualized basis, it's 4 to 4.5 million US. Okay. So in the second half of this year, I think we're guiding around $2 million. Gold price dependent, but and that's because it's coming on stream now. And then I think once it's at full sort of production rate on an annualized basis, about 4.5 million. So it would bring Elemental's revenue probably from Q3 onwards, above 10 million US per year. And there is not another royalty company under 500 million market cap that comes anywhere close to that. We're 100 million market cap as you talk to us today, and I don't think you can get exposure to a royalty company with that much cash flow, unless you're paying multiples of that valuation.
Yeah, it made me think about. So you're looking at Karlawinda when at the height of it was looking about, give or take, 4% of your current market cap on an annualized guidance for what you just said. And how do you make a relationship between revenue guidance for the year based on a royalty company's market cap? I mean, how do you structure that? What's typical? What have you seen in your career?
So I guess in terms of valuation multiples, it's very hard because Gold Royalty Corp, which will be a $500 million company, it will have less than half the royalty revenue we do. Metalla, it's a $500 million market cap company, roughly speaking, again, less than half the royalty revenue we do. So it can vary a lot in the small space. But if you know the royalty sector, you know that everyone wants quality assets and cash flow. Cash flow is the holy grail, and for us to have quality assets in our portfolio, and 80% of the portfolio is on producing assets now, with more cash flow than anyone else, up to sort of 500 million market cap. That's a real that's a key differentiator, and it completely, I think, upends the risk profile, because you can come into smaller royalty companies and have exposure to exploration and development royalties, but what you haven't been able to do before, and I don't think you've been able to do it in the last decade, is get exposure to a junior royalty company with the cash flow that we have. And actually, the last time a startup royalty company went from zero to actually building a portfolio up and getting above 10 million revenue was Sandstorm. So in the last decade, no new royalty company has started from a startup position and has got to the position we'll be in. The only two that have done it with portfolios from majors and from private equity funds. So it's one of the hardest things to do, and I think that we're sort of completely unknown, in terms of the assets and in terms of the quality, and it's something that we've got to address and make sure we get the story out there, because the quality of the assets we have is very unusual in a royalty company of our size and age.
Back in February, you released your annual revenue of $5.1 million US, and you're talking about, this latest one to really come online and start paying at the height of it's going to be 4 million. So you could really start seeing growth here within the portfolio as the way it is, but that's not. Obviously, your goal is to keep things the way it is. You want to continue to build and build. Kind of given the relationship where we are in the gold market right now, and also the gold miners, Fred, where are there opportunities? Where is there a sense of arbitrage to come in for, up and coming gold royalty companies such as Elemental?
Well, I think where we've been really successful in our history is we've been buying third-party royalties, perhaps from non-core owners. So the royalty we bought on base Kwale came from Acacia, which is now part of Barrick Gold again. And we were repaid in 2.5 years completely on that royalty, which is still producing today. We bought 2 royalties from Yamana Gold in 2018 before they realized they owned any royalties. And one of those royalties will be that was fully repaying us this year, and the other on Equinox's Mercedes. The royalty, it starts paying us from July next year and will repay the acquisition cost on an annualized basis from then. So these are royalties that were in billion-dollar, multi-billion-dollar companies that were very non-core. And you are completely right in that the gold space and actually the whole base metal space as well, it's relatively speaking, it's in a good spot. And, a lot of those companies don't need to create royalties to raise funds or streams. And that's why, I think our history stands us in a good stead, because when we started out the company, nobody needed $1 million from Elemental. So we had to go and we had to give away half of our first deal to a private equity fund to get it done. But, our first deal was $1 million, and we had to go and find these unloved third-party opportunities where we could get a lot of value. And that's exactly, just given where the market is, it's exactly sort of where we're still focused today. I think finding opportunities that we know can add a lot of value and will hold a lot more value in Elemental's portfolio than they will in their current owners. And I think we still offer the opportunity for them to participate, take equity in us. In the last deal, South 32, which is a spin out from BHP, the world's biggest mining company, South 32 became our biggest shareholder. And they did that at a $1.50 share price, which is actually above where we are now. And I think they did that because they could see the value that they would get by putting those royalties, which were non-core for them, into Elemental. And I think as we go forwards, we'll be able to get a lot more value for it. And Karlawinda coming on stream is really the first step in that.
Yeah, I think Elemental's done a really nice job of sharing news from your colleagues at Karlawinda on their progress and how it affects not only Elemental but also the shareholders of Elemental. A lot of royalty companies I wish did more of that, and bring their own investors along on the journey through the passive nature of what the royalties business model really is like. So Karlawinda, obviously, in the last month, if you go look at the news, Elemental, you can see the progression of Karlawinda over the last month and a half, just through the Elemental news. looking forward here through the rest of the summer into the fall, what other projects or anything else in the portfolio that's going to be noteworthy for investors in Elemental to really keep track of, which you also plan on sharing?
So yeah, the Karlawinda one, we really wanted to make sure we got the message across because it's an Australian company, and I think a lot of our investors in North American-based investors won't necessarily be familiar with it. And so, if that was a Canadian $700 million company coming on time, commissioning on time and on budget, I think everyone would know it and be familiar. But we've got quite a lot of news coming from the different actually operating mines where we have royalties. So Austral Gold had some really good exploration results in the first half of this year, where we have a 2.25% royalty on their mine in Chile. At Wang Yon, which is now part of Endeavour Mining Stable, so top 10 gold producer globally, they have the second largest exploration budget on that royalty. And that the largest in their portfolio is Massawa, which came from Randgold Barrick. So it gives you an idea of the value and the upside they see there. And that royalty is 1,000 square kilometer land package. So you could probably put 50 different royalties in that same one in terms of just the size and scale. And they're spending that budget over the course of this year. And then at Karlawinda, they've only just started production, but they've actually guided to a resource and reserve update, likely in Q3. And that's really encouraging because I think for them to be doing exploration before they've even started mining, and to be looking to increase the resource and reserve, I think highlights some of the upside that is there. So we've got across the portfolio a number of these operations where they're really actively exploring. And one of the points I would highlight is that 100,000 ounces discovered at an operating mine, I think, has a lot more value than 100,000 ounces discovered in an exploration project. Because the biggest hurdle you've got is always building that mine, getting over that hurdle that a lot of projects don't make it over. And so for us, when we see additional resources at a mine that has already been built and is already up and running, it's a very low threshold for the miner to actually convert that into reserves and mine it, and for us to get cash flow. So it's, the value of ounces of exploration at existing mines is really high. And we look across our portfolio and we see assets there that we think could easily be operating 20 years from now and have the same mine lives that they do today. And I don't think any of that is really reflected or understood, but I think the exploration updates that will be coming out over the next sort of 3 to 6 months should really start to highlight some of those. And I think it will be a really useful point for us to be able to demonstrate to the market how much exploration upside there is at each of these mines.
Yeah. What about a jurisdictional importance here in your portfolio, Fred? West Africa has really been a key highlight over the last 6 months. There's a lot of attention being put in West African exploration plays, also production plays as well. Other than the Wagnon royalty you have in Burkina Faso, are you looking at West Africa at all for potential opportunities to add to the portfolio? And what is the maybe the challenge as far as competitiveness for royalties in West Africa as well?
I think we sometimes say at a sort of general level that we like the mix of Australia, Canada, US sort of tier one jurisdictions with some of the exploration potential in South America or West Africa, because a lot of those jurisdictions are underexplored by contrast within Nevada or West Australia, or some of the gold belts in Canada, some of the more famous ones. And I think that for us, we've always thought that there's you can get again a really good blend of, you want some cornerstone assets in Australia or in Canada or in the US that give you that stable, upside, and I think are really low risk. And at the same time, you want exposure and optionality to some of those projects in developing countries where actually it's still the very early days of exploration and discovery, and those projects might be going for years and years. I think we're lucky in Karlawinda in Australia. It's that very rare beast. It is a new mine in a proven jurisdiction. So that has the best of both worlds, but it's very rare you get that nowadays. You don't get many virgin discoveries, 2 million ounce plus, in a tier 1 jurisdiction. And so we've sort of approached it through a blended way.
Well, let's leave it at that, Fred. It's a pleasure to catch up with you once again. It has been a while, so it's good to see you and good to talk to you.
Much appreciated. Thanks, Trevor.
Yeah, that's Frederick Bell from Elemental Royalties. They trade on the TSX Venture with the symbol ELE and also on the OTCQX with ELEMF. They are a sponsor of the podcast, and we look forward to catching up with them later this summer with more news from the company. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.